Hello, everybody. I hope you're having a great weekend. Welcome to the Trading with Ashley show. I wanted to thank all of those that attended my Buy Right webinar last night. It was so much fun getting to know all of you a little bit better, and I love that you said that you were able to learn with a lot of fun analogies and that now this is something that you can have in your toolbox when trading options. Now, for those of you that missed the webinar, there's no recording of it that I send out. However, I do put it within my community. If you are ever a part of the community, you'll be able to watch it there. Now, the reason that I wanted to make sure that all of my community members were trained on the buy right strategy is we are about to start a $30,000 challenge within the community. It actually starts at the end of this week, and we are going to see how far we can get this account in 6 weeks using this unique trading style. Now, the reason I wanted everybody fully trained is we are going to not only take my trade setups, but I am going to be looking at all of the potential trade setups that my community members feed me. And if we go beyond what we can handle in the $30,000 challenge, then I will go ahead and look at using those trade setups that you're personally finding for the larger account trading that we do. So we are truly a community. We're all rowing the same way. The last challenge was such a success. We had the $25,000 challenge, and the challenge was how far could we get in premium and grow this account in 6 weeks. The last challenge actually went over by 1 week because we just had too many great opportunities, and the results were very impressive. We were able to take $25,000 and selling options. We were able to get it to another $5,400 that we added to the account. And that's in 7 weeks. So that was an over 20% return. Now, if you are able to trade this way on a regular basis, you can take $25,000 like we did and done every 7 weeks for a full year, that would turn into a $100,000 account. Now, results are not guaranteed. There's always risk with trading. So you want to ensure that you are doing the best possible trade setups for all of this to work in your favor. And that's what I specialize in. So let's get back to the challenge at hand. Now, this video is going to be packed with information that will help you because I'm going to teach you what I actually look for with a challenge like this. So even if you don't join my community, you are able to potentially go and do this on your own. Now, if you want all the brain power of me and the community members to help find the setups, well, then you would definitely need to join. But if that's not in the cards for you, at least what I'm sharing with you in this video will help you make some money doing this if you do it the right way. Now, the benefit to this style of trading is you are going for a quick return, usually within anywhere between 3 to 5 days. Now, when you do this type of strategy, you don't want to get married to the stock. I actually have a completely different portfolio where I keep all of my buy and hold plays. So I'm not married to any of these stocks. I want them to be called away. I want them to launch from the nest so that I can use all that capital to rinse and repeat and do other trades. So the setups that work the best with the buy right strategy, because you're buying 100 shares of a stock and then in short order you are selling a call to gain the premium from selling the call and then insure the call away. And like I said, you're usually doing that over a few days. Now, the twist that I like to add to this style of trading, and it's going to be the twist in the examples that I show you of trades we made this week. Sometimes I like to do something called the delayed buy right, meaning I'll go ahead and I'll buy the 100 shares if a stock is primed and ready to run, but I wait to sell the call until it actually gets going. And that has helped me get more premium for selling the call because most of you know if you're selling options, you're going to get more premium on selling calls if a stock is running. The other thing is it allows me, since I bought the stock at a lower price, I get more on the stock appreciation, and that provides for stellar returns. I think you're going to be blown away at the examples I'm going to show you and what annualized return we are able to ink out of these types of trades. So what setups should you look for if you are going to try to mimic this yourself? Well, first, we want to ensure that a stock is in a bullish mode. How do we know that? I like to look at the RSI. It stands for Relative Strength Index. Now, typically, because these are shorter term trades, I'm looking at the 1-month chart and I'm looking for an RSI that is over 50. That tells me that the buyers are in charge and this stock is enjoying all the buying pressure. The other thing, I like to look at the placement of where the stock is in its Bollinger Band. Now, most of you know from watching my other videos, when a stock is at the top of its band or out of the top of its band, typically you're looking for it to retreat just a little. So for that reason, I really look for stocks that are about at the middle of the band to about a fourth of the way up, a half of the way up to the top of the band. Because remember, the goal is for the stock to be called away. So I want to make sure there's a little bit of life left in the trade, in the price action, so that the call away happens. And I do not sweat it if it surges past my strike price that I sold. Because remember, I am not wanting to roll this out. That extends the life of the trade and that hurts my return on investment. So I want the shares called away. I don't fret if it goes beyond my strike price that I sold because I got premium when I sold that call. And I'm also enjoying stock appreciation. But the best part is I'm getting my hands back on those funds so that come Monday morning, I can actually use all that appreciation in those same funds for new trades. And trust me, there is always a new trade setup waiting for you. I don't want anyone to have FOMO when they're trading stocks. There's always a great new stock around the corner, and we take full advantage of that. And the reason that we are able to have such incredible results is because we are not afraid of the dynamics that come with trading the wheel strategy. One, if we have a fair price on the stock that we set our sold put at, we're not afraid of assignment because we know that we will make the most money when the stock are put to us and that stock starts rising. Stock appreciation will trump premium every time you look at the equation, every time you look at the scenarios. But I did want to share risk because there's always risk with any kind of trading. And I want you to be fully aware of what they are so that you can make the best decision for yourself. So when you're doing the buy right strategy, what are the risks? Well, let's talk through an example. So everybody is excited about SoFi right now. Let's assume that you were too, and you wanted to go ahead and buy 100 shares of SoFi for the buy right strategy. So let's say you bought it at $20, anticipating that it would run in the coming weeks, and you'd be able to sell a call for the end of the week, maybe at about $22 or $23. Well, that works great if it does move forward. But what if something came out about SoFi stock and it tanked the stock in a few days after buying it? So you purchased it at $20, but then suddenly it drops to $15. Now you're stuck with 100 shares that you really can't do much with at this point because you have to wait for recovery to start selling calls to the point where you purchase the shares at $20. So that's the risk with this strategy. If your timing is off and if the stock drops suddenly, then you might be a bag holder at least for a little while until the stock recovers again. Now, the way that I trade this, I try to minimize that, but because remember, I am trying to shorten the time between purchasing the stocks and then actually having the stocks called away. The other thing is because I'm actually looking for the call away, I can be more aggressive on my deltas. Now, most of you know from watching my other videos that the delta serves very important purposes when you're looking at it. It really will give you a clue as to what is the percentage chance that by the expiration date, your stock will hit that strike price. Well, if the point is to have the stock called away, then you don't mind being more aggressive on the deltas. So if I'm just doing the regular wheel strategy, I'll typically look for something around a 0.2 delta. But with this, because I want the stock to be called away, I'm looking at something closer to a 0.4 or even a 0.5 delta. And using those higher deltas, give me more premium. So you make money in this scenario by the stock appreciating just a little bit, but you're primarily making a lot of money by doing aggressive sold calls to ensure the call away. So in my examples I'm about to show you, you're going to really be impressed with how this trading style can boost your returns. Let's go into the computer. I'm going to show you everything you need to know about the 2 trades that we took in the community this week. The first stock that I used for this trade setup was VRT. And you can see VRT fits the criteria that I was looking for. We're over 50 on the RSI, and the placement in the Bollinger Band is really nice. Now, we actually bought this stock when it was a little bit lower than it is now. And then I did wait about 24 hours before I actually sold the call because it was just getting going and we wanted to maximize the opportunity. So I'm going to take you into the exact trade. I'm going to show you the math on how this works. When I called out this trade, it was trading at the 122.87 level. So we bought the 100 shares. That took $12,287. And then I waited for it to get going. Once it got going, I sold the 125 call. And because I used the aggressive delta as I was sharing with you, I received $2.48 a share. So that was $248 in profit from the premium. Now the call away will happen at 125. That is going to give me $213 in stock appreciation. So let's put the numbers together. If you have the $461 total between the premium that you received for selling the call and the stock appreciation, if you take that and divide it by the amount of money that it took to put on this trade, that was $12,287. That equals 0.037. Now you'll multiply that by 100 to get the percentage. That's 3.75% return in 1 week. Now, if you take that 3.75% that we produced in 1 week and multiply it by 52 weeks, because the idea is that we'll rinse and repeat on similar trades, that is 195% annualized return. That's pretty impressive when you consider that if you're trading the S&P 500 and you just put it in a mutual fund, you will more than likely get anywhere between 8 and 12% annually. Now, if you're trading like this with a buy right strategy, you can see that you can have significantly higher returns. When you're trading this, again, you can't be afraid of the call away because the whole point is to take that $12,287 that I was using for the trade and look for a new trade setup for next week to keep those returns high. Speaking of new trade setups, let's go look at SoFi, and I'm going to show you the trade that we did on SoFi and the annualized returns associated with it. Now, here is SoFi on a chart. Let's look at the 1 month chart so you can get a better idea of it. It is trading at the top of its Bollinger Band. And look, the RSI is well over 50. It's 83. But when we actually bought the 100 shares last week for this trade, it was trading at about 1850 right here. So we were about in the middle part of the upper part of the Bollinger Band. Well, I'm glad that we waited because now we have sold calls, and you're going to see the call away that actually took place already on Friday, what kind of a return we received on this trade. And we were only in it for 3 days. Here's the detail. So we bought those SoFi shares at $18.50, which that took $1,850. We sold the $20 call once it got running, and for that we received 36 cents, so $36. Calling it away at $20, which already took place, that gave us another $150 in stock appreciation, $1.50 per share. Now, when you put the numbers together, we had $186 in profit on this trade. You divide it by the $1,850 that it took to put on the trade, and that equals a 10.5% return in a few days. If you multiply this by 52 weeks, it's really hard to believe. I had to double check the numbers, but that is a 522% return on an annualized basis. It's really hard to beat the buy right strategy if you do it correctly. Now, if you want to be a part of all the fun, please don't hesitate to book a call with my team to join the community. We were celebrating all week. You know, the market's at all-time highs right now, and I have traders that became millionaires this week after learning how to properly trade. And we had a trader that last week became a millionaire. So we are celebrating 3 new millionaires in the community just this last couple of weeks. And that's exciting because we're sharing with the community that they actually started with an account that was half of the size on what they are trading with now. And it took one of them only about 9 months to get there, and the others it took about a year. So results aren't typical. You have to actually follow a strategy and not be afraid of running something like the wheel strategy so that you can maximize the benefit of that. But that's what we specialize in. We like to teach that in the community. So if you want to be a part of all the excitement, we would love to have you. Now, if you love the thought of the Buy Right Challenge and you want to learn a little bit more about this style of trading, I have another video that I did on it a while back. I'm going to leave that video for you right here.